Welcome to Quick Study. I'm Sarah Borgson-Keeter with REIT.com, and I'm joined by Brad Case, NAREIT Senior Vice President for Research and Industry Information. Welcome, Brad.
Thanks.
So let's start by looking at November. What were the trends that you were seeing last month?
Well, November was another very strong month for REIT investors. REITs over the month of November returned more than 2% on the month. That's very slightly less than large cap stocks in the broad stock market, but quite a bit better than small and mid-sized companies. What we've seen during 2014 as a whole is REIT investors have gained well over 25% for the year, and that's more than 10 percentage points better than investors in the rest of the stock market. So a very strong month, very strong year, and of course we've seen a long history of REIT outperformance relative to the broad stock market. So this is nothing very surprising.
And were there any sectors that caught your eye last month?
Well, the strongest performing sectors were healthcare REITs, retail REITs, apartment REITs. Those sectors have been performing quite well, not just in November, but if you look at apartment REITs, for example, there's so much demand for rental housing among people who have been doubled up with their college buddies and their parents, that we're seeing REIT investors benefit from the tapping of that underlying demand. Another segment of the market that did especially well in November was mortgage REITs. In fact, the only sector of the market that didn't perform especially well was timber REITs. But timber REITs have performed very well during 2014 as a whole, just not quite during November. One thing to point out, though, is that despite the very strong performance across the REIT market, the REIT dividend yields are still very high, 3.4% on average for equity REITs, which is high relative to other assets, and in mortgage REITs it's still more than 10% dividend yield. So strong total return and still strong dividend yields.
And as 2014 comes to a close, what do you see as the big story of this year?
Well, I think the big story is certainly the continued recovery from the downturn. We've seen slow but steady improvement in macroeconomic fundamentals, and that has two benefits for REIT investors. Number one, it increases the values of the properties and therefore generally increases the stock prices of the REITs. But also it increases the cash that's available for the REITs to distribute to their shareholders. So it tends to increase both stock prices and income yields. And that I think we're still early in the long real estate market cycle. But the thing to keep in mind is that the outperformance of REITs is not restricted to 2014. As I mentioned, it's been there for a very long time. Recently, a company named CEM Benchmarking released a study commissioned by NAREIT that asked them to look at the data that they had for more than 300 large pension funds in the U.S. And they categorized all of the pension fund investments into 12 asset classes, and exchange-traded REITs outperformed every other asset class. It outperformed private equity, outperformed hedge funds, outperformed other forms of real estate investment, as well as stocks and bonds and other investments. And that used data from 1998 to 2011, so a very long period of outperformance. And that's certainly what the data have told us, not just for institutional investors, but also for individual investors as well.
Great, thanks, Brad.
It's a pleasure.
And for more news and analysis on all things REIT, please visit REIT.com.